It's kind of the same thing. Over here, what do you get? Price breaks above, breaks down. Here's our problem. Remember we talked about trend. Are you using a 50 for trend or are you using a 20 for trend? Well, if you're using a 50 for trend, this is telling you to look for shorts. You're using a 20, it's starting to angle up here, price is above it, now it's below it, kind of whippy action here. Perhaps you stand aside. If you're using a 50, you're still looking for shorts until in this area right here, then your shorts are off the table, then you're looking for long trades, right? Again, price comes back close to the moving average, right? But really finding support here. Well, let's take a look what we have here. Fed can draw. What do we have here? Price up here, breaks down, breaks up, pullback, continues on its way. You can use the moving averages to get you in tune to the market structure to the left of price. What else do we have? Let's keep on going through this chart a little bit. Just going randomly, I'm just stopping wherever. Over here, if you're looking at trend determination, you still have an uptrend here, gets violated here, right? Getting price acceptance below it. These ones just pivoted off of it. And now we're going to trade. Price below the 50, price below the 20, looking for short trades. Looking for short trades, get taken out pretty quickly, right? Let's look back up in here. Now we got our trending move. We get price moving away from a moving average. When it's moving away from a moving average, we like that, right? Because now price is on the move. When it's going sideways like this, not very conducive. Now we've got pullbacks. But again, what's price pulling back into? Well, look left, right? It's not support and resistance, right? This whole area and through here, bang, bang, bang. Same thing, right? Price rallies up, pulls back down into where? These areas right here. Some people say, well, that didn't come close, right? But people will call these violations acceptable. It doesn't have to be bang on, right? They're called zones. Over here, price breaks up. Look what's happening. Price is going sideways. Look what's happening. The moving average is catching up to price. That's just a function of the calculations, right? Same thing. Over and over and over again. So what we could use this for, we could use it, okay, we're going to trade long or short. If we're going to trade long or short, what are we using? 20 or 50? Are we using an EMA or are we using an SMA? Are we using price just above, price below, or do we need slope in line as well? When it comes to pullbacks, what do we need? Price to pull back to 20, price to pull back to the 50? Well, if it does that, then what do we look for? These are all part of your trade plan that you're going to have to put together. You can't just put these on your chart and say, okay, I'm going to take every single pullback. You can't do that because like this one bounced off of here, right? Well, here it didn't, but then price continues on the upside, onto the upside, into the upside. You can't just take every pullback. Yes, it pulls back here, it bounced off here, but look what's happened. Price has been ranging, so obviously it's going to catch up. But some traders say, okay, well, it's bouncing off the 20, and I take that trade. So they take that trade. Doesn't support at the 20, doesn't support at the 50, but it comes down to here and it goes back up. Your trade plan is going to have to account for all of that. One of the better ways to do it is just use these as reference point. Is price showing the stair-stepping pattern of an uptrend, a downtrend, lower highs, lower lows? Use them as a reference, but not as your ultimate trading decision. Ensure that you're using some sort of structure to look at, because that's what price bounces off of, right? That happens over and over again. So use them as a reference. But if you're going to just take these, okay, prices pulled back and break out, ensure that you've actually tested a money management, trade management plan as well. Because without it, you're not going to have any success whatsoever. Remember that a lot of people use moving averages. A lot of people use a moving average system. At the same time, a lot of people fail at trading. Is there a coincidence that they're all using the same kind of thing or something pretty similar? Probably.